Do not do a balance transfer before considering these cards that were vetted by experts, because I feel it can help you long term and put money in your pocket. And if you understand the right way to do balance transfers, it can help you tremendously and position you to not do what many people do, which is dig a deeper hole. How do I know? I know from personal experience how balance transfers can be a great thing, but also detrimental if you're not careful. So these are the cards that were vetted by experts that I want to share with you, so you can consider this along your journey of determining how you want to go about doing balance transfers. So these are some that allow you to pay no interest on balance transfers until 2027 and earn a $200 welcome bonus. That can be helpful as well when it comes to lowering your balance as you see fit. Now, to 2027, it's 2025 right now in the month of October, almost November. So that gives you over a year of time to have a 0% interest rate, which allows you to pay your credit cards off a lot faster due to the interest rate being higher on other credit cards. That's the key. But the key is not just getting a balance transfer and just paying it as you typically would. If you can double down, because it allows you to pay it down faster. I'm sure you already know that, so I'm preaching to the choir. Of course, make sure you're making payments before the due date, but also find out whatever the balance transfer account statement date is. Write that down. If you don't know what the statement date is, just call them and say, hey, what day of the month do you report to the bureaus? You want to know that date specifically. What day of the month do you report to the bureaus? They'll give you a date. You put it in your calendar on repeat every month. That way you're notified. Okay, they're about to report to the bureaus. Let me get my balance as low as I possibly can. This does two things. Number one, it positions you to save money on interest if you do this on any card, despite if it already has 0% interest from the balance transfer. But it also can help boost your score up to 165 points per bureau, because when you lower your credit utilization, that gives you up to 165 points. That's what that category is worth from a FICO scoring standpoint. And the lower you get, the higher, or the max amount of points you get from it. Ideally, you want to get it to where it's under 5% or even 0, and that helps you tremendously. So find out what that date is that they report to the bureaus, put it in your calendar on repeat going forward, period, point blank. Also, once you do the balance transfer, you want to stay away from using the card that you transferred the balance from. This is a mistake that we made early on, and I know how easy it can be to clear up a card that you were once accustomed to using, but now you have 0% interest based on the balance transfer along with the fees. But now you also have an empty card that looks enticing. Stay away from that. Don't close the card because it has some history associated with it, some on-time payments associated with it, some age associated with it, and you don't want to lose that by closing the card. You want to keep all of that good history, but I don't want you to run the risk of using a card and now you have a card that has been, the balances have been transferred to. So you still have that balance, but now you run up this other card. So now you got two balances, one charging interest, one not charging interest, but you are putting yourself in a double whammy like situation that can hurt you long term. So keep that in mind. Rewind that part, play that back, because that's something that many people do when they do balance transfers. And now they have multiple cards with multiple high balances, and it's hurting your utilization and their debt to income ratio and the debt all together. Very, very, very important. If you don't remember those two things, then, make sure that you rewind it so you can grasp that. And I had to share that first and foremost because I want you to get value from this beyond qualifying for this card, because this only works if you implement and understand what I've already shared. So balance transfer credit cards can help you pay off high interest debt faster, which we covered, and potentially save hundreds, even thousands in interest in the process. So one of the cards is the Citi Double Cash card, if you didn't guess it, because it's been sitting on the screen the whole time, and that's from the Citi Bank. And also, if you want access to this link so you can actually click these cards, the first like and comment that I get on this video, I'll post it in there for everybody to be able to see. That way you'll have access to it. but like and then comment that you want access to the link. I'll drop it in there just off of one comment, no biggie. So that's the Citi Double Cash Card. Now let's look at the details of this. The intro rate, obviously 0% for 18 months. That takes you into 2027, and the regular APR is anywhere from 17.99 to 27.99. Just all varies based on certain particulars. So that's something to keep in mind. Once the 18-month time frame ends, then it kicks into that range of interest rate. There's zero annual fee, which I like cards that have no annual fee. Some cards, their perks justify the annual fee, but I still prefer a card that doesn't have an annual fee. And then they have a rewards rate that allows you to get 2 to 5% cash back. Now, the recommended credit for this card is good to excellent, which is 670 to 850. So that gives you a wide range that you may actually qualify for. If you're not currently at the 670 range, then I have some information down below that can help you take your credit to the next level so that you can position yourself to get the 670 plus score and beyond, and then you can get in position to qualify for these. Now, these are the reasons why they like these cards. Simple, unlimited cashback rewards on every purchase with no annual fees. Lengthy intro rate of the, for the balance transfers, the 18-month, great for tackling high interest debt, and includes access to Citi Entertainment, which offers exclusive pre-sales to thousands of events. So that's something to keep in mind, especially if you're still doing those types of things. Then by all means, why not get the perks, but also just be mindful of not digging a hole. And they gave this basically a 5-star rating because when deciding their rating, they weigh in a number of factors, including cards welcome bonus, reward rate, redemption points, overall simplicity of the card. And the Citi Double Cash Card shines in all those categories as it offers the ability to earn up to 2% on every purchase, has a number of convenient redemption options, plus more. So that's that. Now here are the perks, just so you can know, and then it's just a few other cards, so that way you can understand what is included in these cards and then what you need to do in order to qualify for these cards and benefit from them as well. So the new card holder bonus, earn $200 cash back after you spend $1,500 on purchases in the first 6 months of account opening. If you want to do that to qualify for the $200, by all means, that's on you. But if not, no big deal, because them giving you $200 cash back for spending $1,500 can work against you. The key is if you got $1,500 that you was gonna spend anyway, okay, spend it, pay it all off, get the free $200, and now it's a win-win scenario. But if you just use the credit card and you're not planning on paying the $1,500 off, that's when it can be detrimental, and that's when they get you where they want you. So be mindful of that. This bonus also offer would be filled as a 2,000 thank you points, which can be redeemed for $200 cash back. So that's how it works. The $200 cash back is actually points that are convertible. They have the extra long intro rate, which we covered, 18 months, unlimited cash back in all categories. So simply use the card for everyday spending, and you can earn 2% on most purchases with unlimited 1% cash back when you buy, plus an additional 1% as you pay for those purchases, plus earn 5% total cash back on hotel, car rentals, and attractions booked with Citi Travel. You got flexible redemption points. Cash back is earned from the Citi thank you points, etc. No annual fee. So the bottom line, you got to understand which card might be best for you. That's the Citi Double. Now, this one is the Citi Double Cash. So my apologies. It's actually just one card. They vetted all of the best ones and they narrowed it down to just this one. So here's some frequently asked questions that I go over just so you can understand it and then determine if this is right for you. Again, after you comment, I'll drop the link to this article if you want it so you can click directly, or you can search it on your browser and get access to it that way. But this is one of the questions. It says, are no interest credit cards worth it? I already broke down my perspective and how you can benefit from it, because you got to understand how everything works. So that way, no matter what they're telling you on these sites, you understand the game and you know how to play it. It says, if you can pay off your credit card before the promotional period ends, a 0% interest rate credit card can be worth it. Some of these cards might also be able to earn you bonus cash back on certain new purchases. However, a plan to pay off the credit card is important if you want to save money on interest and get rid of debt faster. That's accurate. Who can benefit from a card with a 0% intro APR? Anyone who qualifies can take advantage of the 0 intro APR. So the list of the type of people who can benefit from one is long. However, here are 2 specific examples in which 0% intro APR offer can make a significant difference. People with crippling credit card debt, that way they're not overpaying on interest, and people with emergency expenses, can benefit from that as well. What happens when a 0% interest rate offer ends. So when your 0% intro APR promotional period ends, your account APR will change to its regular APR, which was set when your account was open. This may be a variable APR, which we showed in the beginning, which was like 17.99% up to whatever the percentage was. And basically this may be a variable APR that takes into your credit worthiness. So it's going to be based on your credit. The higher the better. That way you can get a lower interest rate. So keep that in mind. If they allow you to get access to this card for 670 with a 670 credit score, that's fine. But if you had a higher score, then that intro APR or that APR altogether would be lower. And if you pay off your balance in full every month, you'll continue to be able to use the card interest free. But if you carry a balance from month to month, you'll pay interest on that balance. That's very important to know, because when I talked about having a low utilization of 5% or less, then I told you will save money on interest as well as boost your score. Keep in mind, you only get charged interest on the balance you carry. So even if the interest is high, but you pay it off and you have no balance, then it's a win-win, because you had no balance, so you pay no interest. Very important. How is the APR different from interest? APR, or annual percentage rate, is a number that expresses how much you'll pay for borrowing money, including interest, fees, and other charges. An interest rate is how much interest you're charged for borrowing money. The APR and interest rate for credit cards are basically the same thing, but these rates are typically different for loans. So when you think about the APR for loans, it functions a little different. It's all built into the credit card. But the main thing is, if you know what day they're going to report and you pay it off before they actually report, now you position yourself to have not only a higher credit score, but a low interest rate or no interest rate, because you'll be paying it off in full before they report and not being charged a dime in interest.